Hello viewers, I'm Advocate K. Rawat from LEXIS and Company. Today I'm going to talk about what is direct tax and what is indirect tax. So, first of all, I would like to tell you what is direct tax. In simple words, a direct tax is that tax that you directly pay to the authority imposing the tax. For instance, income tax is imposed by the government and you pay it directly to the government only. So income tax is a form of direct tax only because here you pay the tax directly to the government and not to the other party. These taxes cannot be transferred to any other entity or person. There are several acts which governs the direct taxes. Now, in India, Central Board of Direct Taxes, which is governed by Department of Revenue, is responsible for the administration of direct taxes. The department is also divided or involved in planning or providing inputs to the government regarding the implementation of direct taxes. Now, what are some common types of direct taxes in India? Number one is income tax. As I have already told you, income tax is that tax that is imposed upon you by the government. So here you directly pay that tax to the government only, not to the other person or to the other entity. The most common type of direct tax in India is income tax, as I have already told you. Then number two is securities transaction tax. Now, if you are involved in stock trading, etc., or each of your trade also has a small constituent known as the securities transaction tax. Irrespective of whether you made money on the trade or not, you will have to pay this tax. The broker collects this tax from you and passes on to the security exchange, which then pays it to the government. For example, SEBI. If you are taking any, if you are doing any security transaction tax, in that case, SEBI will take the tax. So SEBI and this direct tax is a form of second type of tax. Now, capital gain tax. Every time you make capital gains, you will be required to pay capital gain tax. This capital gain could be from the sale of property or from investment. Based on these capital gains, the duration for which you held the investment, you will be required to pay LTCG, that is long-term capital gains tax, or then STCG, that is short-term capital gains tax. Now, I'd like to tell you what is the benefits of direct taxes. Number one, it curbs the inflation. In case if there is any monetary inflation, the government can increase direct taxes relates so that the goods services demand can be reduced. As the demand falls, it helps in considering inflation. Then equitable. Direct taxes are also to be equitable as the progression principle is at its foundation. People with lower income pay lower taxes and people with higher income will pay the higher taxes. This is equitable. Then reduces inequalities. The higher taxes collected from the rich are used by the government to launch newer initiatives to the poor. The initiative provided income sources to the people with lower income, helping them to improve their living standards. So, these are the benefits from the direct taxes. Now, there are some disadvantages as well. As you all know, there are some pros and cons of everything. So, now I will talk about disadvantages of direct taxes. It is considered as a burden. A taxpayer are required to pay taxes like income tax in a single lump sum every year. They are considered as a burden. Moreover, even the documentation process is generally complex and time consuming. So, it is considered as a burden. Number two, evasion is possible. While the government has made the evasion very difficult now, there are still many fraudulent practices through which individuals business can avoid to or pay lower taxes, and they should. Then number third is restrain investments. Due to imposition of direct taxes like security transaction tax and capital gain tax, a lot of people avoid investing. So in a way, direct taxes restrain investments. Now coming back to what is indirect taxes. While direct taxes are imposed to income and profits, indirect taxes are levied on goods and services. A major difference between direct and indirect tax is the fact that while the direct tax is directly paid to the government, There is generally an intermediary for collecting indirect taxes from the end of consumer. It is then the responsibility of the intermediary to pass on the received tax to the government. Unlike a direct tax do not depend on the income of an individual. The tax rate is the same for everyone. As I have told you about the equality in the advantages of direct tax, the CBIC, that is Central Bureau of Indirect Taxes and Customs, is mostly responsible for handling indirect taxes in India. Just like CBDT, CBIC also work under the Department of Revenue only. Now, what are some common types of indirect taxes? Number 1, GST. You all know about the GST. It is goods and service tax. So, GST subsumed as many as 17 indirect taxes in India, like service tax, central excise tax, value added tax, and more. It is a single comprehensive indirect tax which is imposed on all the goods and services as per the tax slabs laid by the GST Council of India. One of the biggest benefit of GST is that it is mostly eliminated the cascading or tax on tax effect on the previous tax regime. So these are some common types of indirect taxes in India. I hope you like my video and you are clear what are the direct taxes and what are indirect taxes, along with the advantages and disadvantages of direct or indirect taxes. I hope you like my video. If you have any comments regarding direct and indirect taxes, to post your queries in the comment sections. I'll resolve all your queries. Till then, take care of yourself. I'll see you super soon in my next video with some other topic. Thank you so much.